for Sustainable Wealth every Friday, 7 p.m. UTC by Fluffy and Alex. Crypto markets crashed hard and Celsius network was one of the reasons or one of the victims. What happened with Celsius, how we got here, is Celsius out of the woods, and what consequences there are for us and the crypto industry in the case of a Celsius network bankruptcy. Should we consider investing in Celsius again? A tale of love, hate, big luck, drama and betrayal. Let's dive in. Alex, back to you.
Hello guys, let's see. Once upon a time there was an innovative lending platform with centralized and decentralized finance features that gave 80% of its revenue back to its clients. A platform that few weeks ago had $12 billion in assets under management and $8 billion in lending. Everything started 1 week ago, when rumors of Celsius network freezing withdrawals and halting account activities of their clients. In the beginning it was all rumors, and CEO of Celsius, Alex Mashinsky, verified through Twitter it was all FUD. We all hoped that it was true, but one day later Celsius officially paused all withdrawals, swaps and transfers. Apparently there was a problem after all, and most likely a liquidity crisis was on the way. Due to adverse market conditions, we had a bank run incident, meaning the majority of the Celsius clients wanted to withdraw their assets from the platform all at once. And as we all found out later, asset liquidity became an issue. Celsius could not meet their obligations. It got to a point where Celsius almost got liquidated on some quite big positions, like the one they had on MakerDAO for an amount of $275 million. All Bitcoin price had to do was reach $22.5 thousand, and $275 million in assets would be gone in an instant. We don't know how at a certain point Celsius found some assets and money to top up collateral on Maker to save their positions and lower the price of liquidation to $14,000. But they did. Maybe some good old pals helped them. We know for sure Nexo offered giving a hand by rubbing their hands very hard, with no ill remarks like all good friends should do. And just like magic, after increasing their collateral, Celsius started repaying their DAI debt on MakerDAO. Now, before continue with our story, if you guys want to check an awesome crypto battle, just click at the suggested video at the right top corner. Maker wasn't the only one Celsius was parking their clients' money in to generate some yield to be able to pay those tremendous interest rates to their clients. Actually, Compound Finance had $420 million of Celsius assets, and it was quite a lot, to be honest. 47% of all borrowed DAI came from Celsius. Well, here in our viewers' minds, a question arises. How much money locked in all those DeFi protocols actually comes from a few key players like Celsius? And what happens if those players go bankrupt? But we digress. Either way, Celsius started paying off their debt to Compound for now, as it seems. But what happens with Ethereum, and more accurately, the staked Ethereum that is locked in Aave protocol? We now know that the Ethereum tokens that Celsius took from its clients, the majority of them were not held as ETH tokens, but were locked in Ethereum 2.0 by Lido Finance. And Lido gives you back a token, STETH, that represents that locked Ethereum. Staked ETH is a liquid and should have the same value as normal ETH, but due to extreme market conditions, it started losing its peg against ETH, which created a lot of problems. Either way, for now Celsius have topped up their Aave collateral by adding more ETH to reduce the liquidation price and slowly started repaying the debt they had there as well. All this had positive impact on the token, as it had almost a V-shaped recovery, from 80 cents to 27, and from 27 cents back to 71 cents. Now CEL token sits at 52 cents. How all this could have started? Well, there are many factors, but mainly when we had our bull market and things were great in 2021, Celsius had no problem making money on the side because there were many arbitrage opportunities. Also, generating yield on DeFi protocols was not a big problem. But when 2022 kicked in, and bears woke up in the caves, Celsius had to find new ways of generating revenue. They even sent $275 million to Anchor Protocol in an effort to find new opportunities. Yes, that Anchor Protocol of Terra Luna ecosystem that many had criticized being a Ponzi and unsustainable. And that, my friend, happened approximately 1 week before Terra Luna collapsed. But trust me when I say this, we all, me and you as well, should hope for Celsius to get out of this as a winner, because the alternative could be devastating. We have no idea the ripple effects a bankruptcy of such a big player can have, because not only we understand that a lot of money on DeFi comes from players like Celsius, but also the ties it can have to other major players are a mystery, and all that can lead to a series of liquidation events, bankruptcies, and more selling that could propel Bitcoin price lower than 10,000. And we don't want that, right, Fluffy?
We don't want that.
We all heard rumors about 3 Arrow Capital being insolvent, as well and having troubles. Just to remind you, 3AC is estimated to have around 18 billion in assets under management, and there are big names on its portfolio that could drown along with it. So we hope everything goes fine, Fluffy.
I think it will.
You do?
Yeah, I'm very optimistic.
I'm rooting for us.
For now.
Now, some brief tokenomics on Celsius for us to understand if it actually manages to get out as a winner, how the CEL token could perform, and if we should get into it. At this point, Celsius network is worth $127 million. 238 million CEL tokens are out circulating based on CoinMarketCap. Maximum there can ever be 695 million CEL tokens. The circulating supply constitutes 34.2% of the maximum. But to my surprise, there is no inflation at all. No new tokens will come to the market. Why? Because all the tokens are already generated and unlocked. The thing is, CoinMarketCap calculates the tokens the team owns and other tokens in the treasury as locked tokens and not circulating, meaning they can dump on the market anytime they want. But what we can do? It's unlocked. Yes, but on a good note, we know that majority of the money Celsius makes, they deploy it to buy back tokens and give them back to clients as rewards. That's why they are crazy with good incentives and returns if you actually use CEL tokens. Also, since October 2021, Celsius started burning permanently some of the tokens they are buying back from the market, making CEL token essentially deflationary. So, should we consider it as an investment?
Celsius was one of the first companies to bridge DeFi and centralized finance, meaning that their clients were composed by both retail investors but also financial institutions. They would take away the complexity of arbitrage, like fundamental arbitrage or statistical arbitrage. They would generate profits for both retail investors and financial institutions, and they would return back to them their profit. So I think there is some kind of honesty and due diligence towards their investors and, generally speaking, their clients.
Yeah, it seems so. Like their model is clients first.
I think that crypto technologies are experimental, and this is the outcome, right?
Yeah, market conditions. What can we do? Now, first of all, bull market ending maybe was not the only difficulty that Celsius had, as SEC pressured Celsius on all fronts about some assets being unregistered securities. This had as an effect Celsius to stop offering new products to non-accredited investors in the US, which was another hit on finding new clients. Although we may have no inflation on CEL token, if we reduce the demand for the product, then price will fall down. Now, Celsius faces legal challenges as well after freezing withdrawals. Even our famous YouTuber BitBoy announced a lawsuit against Celsius. Although this might be the reason why the team sought professional legal help to fight claims like that, maybe.
Yeah, as already stated, crypto is an experimental technology. DeFi is being live for like a couple of years, if not less. And it is interesting to see how this is going to affect the crypto industry as a whole. I mean, is there going to be a ripple effect?
I believe that if Celsius goes bankrupt, we will have a massive ripple effect. That's my belief. Either way, I can't know all the intricacies of the lawsuit. I do know that the terms and conditions Celsius has clearly states that in similar events, such as those that we had, its clients have no legal remedies or rights in connection to Celsius obligations.
Yes, at this point, it does worth mentioning that Celsius did perform multiple security audits in their code. They took security seriously and even implemented a relatively solid KYC process.
Lastly, I want to mention that if we looked a month ago into Celsius, we probably would assume undervaluation as the market cap was much lower compared to the TVL or the total asset under management this company had. But the lesson is clear that TVL should be judged by its quality as well and not only by quantity. If Celsius manages to recover as a winner from all this, I would consider its token as one to accumulate when we hit the macro bottom of this bear market, as it shows tremendous resourcefulness and potential. Let's see how all this will unfold.
Yeah, so again, one more time, DeFi should not be considered to be a mature technology. It's been live for the last 2 years. I think that we are basically see something like the .com bubble back in 2000. It's repeating again, but this is a 10x, I would say, just like we say in crypto. And people should be patient, careful, and diversify their portfolio. Don't put all your assets into a single hybrid DEX company, single entity. Diversify, be careful, read the white paper, follow the news, and you will protect your assets.
Now that's it for today, guys. If you like the episode, subscribe, like, comment, and we see you next time.
Bye bye.
Bye bye.
Dear guys.